Welcome to The Explainer. Today, we are unpacking a stock that is at a serious crossroads. We've got bullish hype on one side, bearish warnings on the other, and we're going to try to figure out what could happen next after a truly massive surge. Yeah, you're seeing that right, 51.57%. That is not a typo. We're talking about a company called BioKey International, ticker BKYI, and its stock just exploded by over half in a single day. You see a number like that, you just have to stop and ask, what in the world is going on here? So that huge jump, it really leaves us with this big mystery, right? Is this just a one-day wonder, a flash in the pan that's about to fizzle out? Or is this the first big move in something much, much bigger? A real golden opportunity for anyone who's watching closely. All right, so let's get into it. First up, let's build the case for the bulls. What are all the signals telling us that this rally might actually have some legs? Okay, so if you're just looking at the surface, the dashboard is just lit up with green lights. The price? It's soaring way above its recent 20-day average. That's a classic bullish sign. And the volume? Get this. It was more than 31 times what's normal. That's a ton of interest. On top of all that, you've got momentum indicators like the CCI. They're pretty much screaming buy. And this right here? This is exactly what gets traders so excited. See, when a stock's price just blasts past its recent averages like that, it's like a textbook signal. It's telling you, hey, the old trend is broken, and some powerful new upward momentum might be taking the wheel. But, you know us, we don't just stop at the surface. And as soon as you dig just a little bit deeper, the story of BKYI gets a lot more complicated. So let's flip the coin and look at the other side, the conflicting evidence. Because it really feels like for every single green light on that dashboard, there's a big flashing red one right next to it. And that just makes this whole thing even more of a mystery. And this slide just perfectly sums up the conflict. It's a real tug of war in the trading volume. On one hand, you've got something called on-balance volume. Think of it as tracking the big money over the long haul. It's through the roof, which suggests big long-term investors are buying up shares. But then you look at the accumulation/distribution line, which is all about what's happening day to day, and it's sharply negative. That's telling us the short-term traders, they're selling into the rally, cashing out. And believe me, the confusion doesn't stop there. Check this out. You have one indicator, the ADX, which measures how strong a trend is, and it's basically shouting, yes, we have a strong trend. But then another tool, the Arun oscillator, which is supposed to tell you the direction, comes in and says, whoa, hold on a second. The main trend is still pointing down. I mean, they can't both be right, can they? Okay, so how do we make sense of this? To really solve this puzzle, we've got to line up all these conflicting clues right next to each other and see what bigger picture emerges. And really, this quote gets to the heart of it. This is not some simple story of a stock that's just going to the moon. Nope. It is a technical tug of war. You've got all this short-term hype pulling in one direction and some really persistent, serious bearish warnings pulling in the exact opposite direction. I mean, just look at this table. The momentum indicators are completely all over the map. It's wild. You've got stochastics way down low, suggesting, hey, maybe it's a buy. But then, at the exact same time, the money flow index is cranked up to 98.7, which is basically a giant blinking sign that the rally is overbought and about to run out of gas. And then the MACD is over here saying momentum is already getting weaker. It's just pure contradiction. So let's talk about that word, overbought. What does that even mean? The best way to think about it is like a warning light on your car's dashboard. It doesn't mean your car is about to break down, but it is telling you, hey, you've been flooring it for a while now, maybe it's time to ease up a bit. It's a signal to be cautious. And to put a number on it, here's just how far this thing has stretched. Statistically, the stock is trading a full 23% above its own trend line. That's a really big deviation, and it just adds more fuel to this idea that this huge jump might not be sustainable in the long run. Okay. So we've got all of this conflicting data, bullish excitement on one side, bearish warnings on the other. So where do we go from here? What are the key battlegrounds we need to be watching? Where is this whole tug of war going to be decided? Well, it really all boils down to three numbers, three key price levels. You've got your floor, the support level down at 74 cents. The bulls absolutely need the price to stay above that. Then you've got the ceiling, the next resistance at $1.28. And right in between them, That's the main battlefield. The pivot point at $1.06. That's likely where control of this stock is going to be won or lost. And as you can see right here, the current price is basically sandwiched in this critical zone. It's above that support floor, which is good for the bulls, but it's stuck right underneath that all-important pivot point. And that is why the very next move for this stock is so crucial. It could really decide who wins this fight. So when you put all this evidence together, it looks like the future could play out in one of four main ways. Scenario 1, the bulls win. The price smashes through that 1.06 pivot and heads for the 1.28 resistance. Scenario 2, the bears win. It fails at the pivot and tumbles back towards support. It could also just go sideways for a while, just chopping around. Or Scenario 4, a huge breakout, where it finds another gear, blows past 1.28, and maybe even targets $1.50. And really, that's the main takeaway here. This stock, BYKI, is perfectly balanced on a knife's edge. You've got this explosive short-term hype on one side and some very serious long-term warning signs on the other. The key is just understanding that these two opposing forces are at play, because once you see that, you can start to interpret what happens next. So the big question now, the one the market has to answer is, which side is going to win?